Okay, so let's talk about something that might keep some folks up at night.
Mm-hmm.
What happens to your investments if your stockbroker goes belly up?
Yeah.
It's a scary thought, right?
It's a valid concern. Absolutely.
Yeah. And today we're going to dive into some excerpts that lay out exactly how you're protected in these situations.
Yeah, I think a lot of people don't realize just how much is in place to protect investors.
Right.
It's not like the Wild West out there.
Yeah.
Yeah.
So let's start with the basics.
Yeah.
What is the fundamental structure that prevents brokers from just running off with our money?
Well, the key is that the system is designed to keep your investments totally separate from the broker's operations.
Okay.
It's not their personal piggy bank or anything like that.
Right. So it's not like they're taking our money to Vegas and betting it all on black.
Haha. No, not at all.
Okay, good.
It's more like, think of it like a safety deposit box at a bank.
Okay.
Your stocks, your bonds, all your securities are held in these institutions called depositories.
Depository.
Yeah, you've got CDSL and NSDL,
Okay.
and these are specifically designed to hold and safeguard these assets.
Gotcha.
The broker has access to manage them on your behalf,
Right.
to execute trades and things,
Right.
but they don't actually own them.
So even if the broker goes bankrupt,
Yep.
my stocks are safe.
Safe and sound in the depository.
Okay, that's a relief.
Yeah. And, what's also great is that you can easily transfer those holdings to another broker if you need to.
Right.
Through your Demot account.
So I'm not stuck.
Exactly. You retain control.
Perfect.
Which is really important.
But what about the cash in my brokerage account?
Yes, good question.
Is that protected too?
Absolutely. So SEBI, the market regulator, mandates that brokers have to keep client funds completely separate in what's called a pooled account.
Good.
So that means they can't use your money for their own business expenses.
Yes.
Can't use it for risky ventures or anything like that.
That makes sense.
Strictly for your investments.
Okay, so we've got these safeguards in place. But let's say the worst happens, the broker does go under.
Mm-hmm.
Is there any way to actually recover the funds?
So that's where the Investor Protection Fund comes in,
Okay.
or IPF for short.
IPF.
This is a safety net for investors funded by the stock exchanges.
Okay.
Both the NSE and BSE have their own IPFs.
Okay.
Now, the NSE's fund covers up to 25 lakhs per investor,
25 lakhs.
while the BSE's covers up to 15 lakhs.
Okay, so there's a difference there.
Yeah, slight difference.
So even in the worst case scenario, there's at least a chance.
Yeah, you could recover some or all of your funds.
Okay.
But it's important to remember that the IPF does have its limitations.
Of course.
Right. The coverage limit means that if your losses are above those limits,
Mm-hmm.
you might not get full compensation.
Right.
And also, while it's a significant protection,
Yeah.
it's not meant to replace your entire portfolio.
It's not like insurance for every rupee you have in there.
Exactly. It's a safety net
Okay.
to help minimize losses.
All right, so how would I even go about claiming from this IPF?
So if your broker defaults,
Mm-hmm.
there's a defined claims process you can initiate.
Okay.
You typically have 3 years to file that claim.
3 years.
And SEBI has guidelines outlining the procedures and eligibility criteria.
So it's kind of like having car insurance,
Yeah,
Hopefully you never need it, but good notes there.
exactly.
Now, speaking of learning from the past,
Yeah.
what about that whole Carvey stockbrokers case?
Oh, right.
Didn't that lead to some changes in the regulations?
It did. You're absolutely right. The case exposed some vulnerabilities,
Mhm.
and SEBI responded by implementing stricter regulations.
Okay, what kind of regulations?
Well, for example, they tightened the controls on the segregation of securities,
Mhm.
making sure brokers can't pledge client securities for their own loans.
Oh, okay, that makes sense.
Yeah, and they also made upfront margin collection mandatory,
Okay,
which reduces the risk of brokers misusing client funds for margin trading.
interesting. So SEBI really stepped up their game.
They did. They took it seriously and made some important changes.
So can investors breathe a sigh of relief now?
I'd say to a large extent, yes.
Okay,
These measures offer a good deal of security, but
always a but.
it's also crucial for investors to be proactive themselves.
Okay,
Do your own research.
right.
Look at the broker's track record, understand their financial position.
So don't just blindly trust.
Exactly. Knowledge is power in this game.
Great point. It's not just about relying on the system.
Yeah,
It's about taking control of your own financial well-being.
absolutely.
All right, so for those who want to dive even deeper,
Mm-hmm.
check out the resources provided by SEBI, NC, and BSE.
Good idea.
Stay informed, stay invested, and stay safe.
Couldn't have said it better myself.
All right, that's it for today. Thanks for listening.
Thanks for having me.
See you next time.
Bye.